madness going on before this, because I was analyzing and drawing a lot of lines. But yeah, so first things first, the rand pairs are amongst my favorites simply because they're stable. They they move in a yeah, they move in a stable fashion in up in basic movements. It's not a lot of ranging. It respects support and resistance, and it's basically an easier pair to trade, especially for beginners, I would say. So euro rand, US dollar rand, and gold and silver. If someone wants to look for the easiest ones to learn, I would say Euro Rand, rand, US dollar CAD, gold, and silver. Those are the easiest ones to learn. They follow not only support and resistance, but a lot of the traditional patterns. So the Gartley patterns, Fibonacci patterns, head and shoulders, triple tops, double tops. It follows a lot of the maths patterns. They're called maths patterns because I think they were developed by a lot of mathematicians. But yeah, it follows a lot of them. Even for trend trading, it follows because as you can see, from the 31st of December onwards, we've been in a continuous uptrend. So it follows even trend trading. That's why I like the rand pairs, even though it hasn't been performing too well. As you can see, look at that. Fell all the way from up here and then did a bit of a ranging motion all the way to down here. It's been ranging. So why did I enter? And I think I'm going to be holding for a really long time. I saw something of channel, right, or bullish flag, if you want to call it that. So it's called a channel or a bullish flag. So basically, I drew the resistance of the support of the flag, which is down here. And again, this isn't set in stone. So if you're going to risk your entire account on one pattern, good luck on that, because as you can see, even though you can draw out these patterns, right, and say this is the support, this is the support, this is the support, sometimes it will breach, sometimes it will not respect those support levels, sometimes it will, and then it just bounces back, it whiplashes back into position. So there's always that. And so this is the resistance area, this is the support area. What caught my attention was on the lower time frames, right? So if we zoomed in, what I saw, which was interesting, was actually this movement here. So on this bigger bullish flag we've just seen, I drew this smaller bullish flag again, right? So as you can see, we've been in a descending channel, by the way, descending channel, descending channel, descending channel. But I think we're going to break through. That's why it caught my attention. I think we're finally getting to the end, because obviously if it's a descending channel, the next thing we're looking for is the beginning of an uptrend. So I feel that we're done with the descending channel. As things start to normalize, I think we're going to head towards this area here that I've marked out as support. So I wouldn't say that's the target, but so if you see the red and green lines, those are just my entries, and then they all the positions have been taken to break even. So the reason why I have three here is because one is a much smaller position, other one is the other two are quite big, and then there's this third one. Anyways, there's a method to the madness. But so yeah, this was the falling channel, and I like the falling channel for one reason. I've tended to see that after a falling channel, usually once we start to break up into the uptrend, we usually knock the first resistance area. So it's a good target to get here, even though you can obviously aim for higher. I just prefer this first target here. It's safer, and so that's why I have like multiple positions. So what I would tend to do personally is once we get to this area, then close all my big positions and unwind at that area. Right. So this was the downtrend, and hopefully we're seeing a reversal up towards this target. This is the actual target. So I would leave my smaller positions for that target. and then the rest I'm closing once we've hit this target here. That's pretty much it. It's not that complicated, which is why I love the euro and the rand pairs. They're quite simple. Look at these clean formations it does form. So that's just food for thought. That we're just finishing this downtrend and then we're moving up to the uptrend. If it is a reversal, if it isn't, let's just go down to the daily so you can see where I'm coming from. So if you go onto the daily chart, it does look like a bit of a pincer pattern, which isn't, it's a good pattern. It's more like, it's similar to a falling wedge, which obviously is a reversal pattern to the uptrend. So this would be the pincer, and then this would be the reversal. So if you zoomed in again, if you like candles, if you zoomed in again, this would be the reversal to this downtrend candle here. This would be the bearish candle. This would be the reversal to the upside. And then if we zoomed into the 4-hourly chart, this was the reversal, this was the reversal, and now we're just stuck. And so this was another entry I got in just, I think on Friday, just before we break out, or if not, then there's a stop loss right underneath, just in case we don't break out. But sometimes the 1 hour is so useful, especially when you want to get a closer insight and you want to get better entries. The 1 hour is a good entry. Oh yes, and then the second thing was your entries. In order to not get stopped out, what you want to do is, as Dr. David Paul says, you want to enter where you would put your stop loss and then put your stop loss further down. So for example, if you normally would have entered here and put your stop loss here, you're obviously going to get knocked out. So what you want to do is wait, hypothetically act like you'd place your trade and then put your stop loss, and then wait and then put your entry where your stop loss would have been. I hope that makes sense. So hypothetically, what you're doing is delaying your entries so that you don't get stopped out. I think it's the best advice I've ever heard from Dr. David Paul.